Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Another choppy week out there for equity markets, really not helped by the ongoing sort of uncertainty and continuous sort of merry-go-round of the Trump presidency. It's really going to be very interesting to see how that sort of plays through. He's sort of chopping and changing and always coming up with the sort of rhetoric that the person just didn't quite agree with his sort of views. But it's been really great working with him. He's been super person, etc., etc. But sooner or later, you're really losing all of the good people out there in Washington, and he's really sort of filling his cabinet and post with sort of yes men who just basically rubber stamp it and anything he sort of puts forward. Also as well, obviously there's increasing pressure as the Mueller investigation sort of gains a little bit of a head of steam again, and sort of first time now a little bit of rhetoric coming out from the presidency that he's looking at sort of maybe terminating that investigation. That would certainly be seen as a pretty negative impact, but also as well, potentially a sort of slight admission of guilt as well. That if you're looking at cancelling the investigation that's investigating potentially harmful dealings that you're involved in, it doesn't really bode too well. And then finally as well, this morning's been another shooting in a school. That's just going to put further pressure on the presidency and sort of gun controls and the sort of conflict with the NRA in the US. In terms of market sort of economic data and everything, market is still pushing on at a pretty good rate in terms of the data coming out of the US. The economy is still pretty strong. Just waiting to see whether the Fed sort of rubber stamps their latest sort of rate hike. Most analysts expect they will, but really it's going to be more important to see the sort of commentary that comes with that rate hike and whether they're looking at sort of a further 2 or 3 rate hikes this year. All this is taking place against the backdrop of the G20, and again, just going to be very interesting. Not so much to see what comes out as the main sort of comment from the G20. That's going to be pretty sort of standard, one expects, but it's probably the sort of behind the scenes sort of wheeler and dealing and sort of negotiations that's sort of taking place. Because certainly at the moment China looks to be sort of increasing its sort of influence on the global economy, and it'll just be interesting to see how this sort of plays through. Oil, we cover a little bit of ground, back up around sort of 63. It's sort of quite interesting as well. It's been a pretty severe winter in the northern hemisphere, and it looks like New York, Washington could get a further snow dump this week. And it's just going to be interesting to see how oil sort of now trades going into the sort of summer season in the US, potentially the big driving season. It's just going to be interesting to see how that sort of demand holds up. Good news from Europe. It looks like there is finally a sort of a deal on the table for Brexit. Both parties seem to have come to a sort of amicable solution. It's now going to be interesting to see if they can get that through the respective parliaments, and then we sort of kick into the actual deal being put into place in March of 2019. Before that takes place, though, obviously a lot of water will go under the bridge, a lot of hard negotiating with the relative parliaments, and it's just going to be interesting to see what sort of compromises have to be sort of agreed to get the respective Brexit deal through. Also as well, it might be worthwhile just checking those KiwiSaver balances. And certainly if you're making contributions in there, just make sure you've got the minimum to get the maximum tax credit. You have to get that 1,042 in by June. So it's just maybe worthwhile just checking your sort of contributions for the year to date so far, and just making sure that if you haven't quite made that 1,042 and you are able to afford it, just get top up those balances just to get that maximum tax credit. If you are unsure on that, say call us on 0800 867 323. In New Zealand, the economy is still pushing on a pretty good rate. Reserve Bank meeting later this month, again expectedly rates on hold, and it's going to be interesting to see the commentary that comes out. We've sort of been led to believe that rates will be on hold until at least sort of mid to late 2019, and it's just going to be very interesting to see if that sort of plays through. Certainly there is a little bit of inflationary pressures in the economy, but with housing coming back off the boil a little bit, potentially they can sort of ride that through until, let's say, sort of mid to late 2019. And obviously, those out there are looking for income options. When you compare with the sort of TDs or the current fixed level of bonds coming through, fixed bonds are looking around sort of 5 to 7 years in duration. And the rate is around sort of high threes to sort of 4.5 if you're lucky. And that's going to be fixed anywhere between sort of 5 to 7 years. If you're looking for the dividend options out there, there are plenty of options. And if you're interested in discussing those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We'll look forward to speaking to you soon.